The Seacom project faced a number of hurdles in terms of raising the requisite capital. The immediate challenge was what was referred to as the first dollar dilemma. Now, the first dollar dilemma describes a scenario where potential capital providers refrain from committing the first capital tranche because they're waiting for other investors to make the first capital commitment and to signal the viability of the project. Seacom also encountered investor hesitance after the bursting of the dot-com bubble in 2001. So potential investors were of the view that there was a higher risk of investing in sub-Saharan Africa. The project was also very complex. It required the cooperation and the participation of at least 9 African states and 5 international partner nations. Significantly, an important part of the business case was that Seacom would be first to market, and this required capital to be raised speedily. Financial closure on the project was threatened by the escalation of the international financial crisis towards the end of 2007. This resulted in credit markets becoming progressively less liquid. A European hedge fund that had been envisaged to take up a significant equity stake in Seacom was unable to make good on its commitment, resulting in African equity ownership increasing from 50% to 76% when a replacement investor was found. Now, the Seacom project team said they were lucky in that they managed to raise the capital before the crisis had really impacted on the lenders. If the team had moved slowly and tried to do the deal 6 months later, the margins would have been much higher or debt funding would simply have been unavailable. So the project company also managed to secure more competitive pre-crisis floating LIBOR rates. And the unhedged interest rate exposure benefited from the decline in LIBOR as a result of the subsequent quantitative easing. While the cost of the overall project was $600 million, the project developers and sponsors were innovative in reducing the capital injection. Firstly, by entering into co-build arrangements on specific sections of the cable, including the Africa to India and Middle East to Europe legs. The actual capital outflow from Seacom was restricted to $300 million. The project company also made extensive use of indefeasible rights of use to raise capital upfront. IRUs are simply a mechanism where wholesale buyers of data or voice pay an upfront fee, entitling them to specified data capacity on the cable, and generally spanning for a period of 15 to 20 years. Capital raised from IRUs to fund the project construction amounted to almost $160 million. Wholesale subscribers' contributions therefore had a significant influence on the leverage within Seacom.